Big changes and increases to everybody on Social Security by 10%. That means if you're on SSI, SSDI, whatever way you're collecting a Social Security check, for every $1,000 you receive, you get an extra $100 more per month. So everyone on Social Security, every $1,000, you get an extra $100 more per month. That's a big change according to this one bill. So if we look at this right here, 8 revealing numbers from the Social Security 2100 Act, I'm going to scroll down to number 6, which is the biggest one here, talking about a 10% increase. So saying here, errors under the bill's proposed method for measuring price inflation would cause benefit overpayments of over 10% relative to accurate calculations. So basically what that means is an overpayment of 10%. Not sure if there's such thing as Social Security recipients getting overpaid. If anything, they're always underpaid. But according to this, an overpayment of 10% due to a new COLA adjustment calculation. You don't want to miss this. So that's number 6. Got some other really good numbers to share with you here of what could happen to your Social Security check. So you don't want to miss that. I'm going to reveal this entire article to you with a lot of important numbers to share with you. So I'll give you that and some other important updates as well. Before I dive into the main content, if you appreciate the regular Social Security updates, hit the like button and subscribe to the channel for more of the latest updates regarding Social Security increases, decreases, proposals, bills, anything related to Social Security. Subscribe to the channel. All right, let's get into it here. So 8 revealing numbers from the Social Security 2100 Act. So this article is slightly a dig at this bill. It reveals some really good numbers objectively, but also talking about certain things like overburdening rich people with taxing them more. As rich people are living such a hard life, we don't want to burden them more with taxes. That's me being sarcastic, but it has some certain things like that in this article. So just a little heads up with that of the tone of the article. It is not 100% for the Social Security 2100 Act, which is the bill in Congress right now gaining the most traction. Which is probably the one that is out of the 10 plus bills in Congress right now, the Social Security 2100 Act has probably the highest chances of passing, as it does have some bipartisan support. All right, so let's get into it here. Number 1, low-income workers' payroll tax burdens would rise 19%. In order to fund its significant benefit expansion, the Social Security 2100 Act would increase payroll taxes on all U.S. workers, including the poorest ones. While many low-income American workers pay no federal tax income, they nevertheless do pay payroll taxes. Social Security tax would gradually rise over several years from 12.4% to 14.8%, which when fully phased in, would represent a 19% increase in low-income workers. So, yeah, looks like there could be taxes for everybody, which taxes are not fun, although they pay for things. No one wants to pay more in taxes, but it could fund the Social Security program. All right, so real inflation-adjusted benefits for high-income workers would be 66% higher mid-century. So what it's talking about here is the legislation would accelerate the benefit growth, I missed a part. All right, much of the bill's tax increase on low-income workers would be spent on higher benefits for richer ones. Initial Social Security benefit levels already grow faster than price inflation because of an indexing mechanism current in law. The legislation would accelerate this benefit, doing so especially rapidly for the highest income beneficiaries. This can be illustrated via the example of high income workers with earnings consistently at twice the Social Security taxable maximum, an annual earnings level of $266,000 today. Under the current law, benefits for a retiree in the year 2050 with earnings twice the current taxable amount would be 51% higher. So yeah, this would be a lot higher with that. This would be 66% higher compared to 51% higher. Number 3, the total Social Security payroll tax burdens would rise by over 40%. So under the current law, One substantial cost of employment is the 12.4% Social Security payroll tax assessed up to a maximum of $132,900 of a worker's earnings. This cap is statutorily indexed to grow in most years. The bill would gradually increase the Social Security payroll tax to 14.8%, as well as eventually eliminate the cap. These two effects together would increase the total Social Security payroll tax burdens nationally by over 40%. This would also increase the Social Security plus Medicare payroll tax from its 15.3% to 17.7%. So, as you can see, this article pointing out all of the increases in taxes. I'm going to be honest here. I've done a few videos on the Social Security 2100 Act. None of them have been as detailed or organized as this, and bringing out some new numbers that I actually haven't seen before this article. So really interesting here. Next, number 4, retirement benefits for the lowest income quintile of workers would exceed 95% of their prior earnings. A replacement rate is the percentage of one's earnings as a worker that one's subsequent retirement income is sufficient to replace. Most advisors recommend that individuals save enough to finance replacement rates of 70% to 80% in retirement. According to data published earlier this year by Nonpartisan Congressional Budget Office, Social Security by itself already pays an average replacement rate of 80% for those in lowest income quintile. The bill would increase these benefits, pushing these workers' replacement rates above 95% on average. Combined with the bill's tax increases, this means that low-income workers would not be able to amass retirement saving on their own without pushing their own standard of living during their working years far below what they expect to experience as retirees. So it is not fully replacing their wages as a worker. All right, so number 5, Social Security payroll tax burdens for high-income workers would be multiplied by 2.4 times. So this one is interesting here. So I like the wording. I think it's funny. It burdens high-income workers, as if high-income workers are living such a tough, terrible life. We don't want to burden them more with more taxes. So what it's saying here is proposals to raise Social Security payroll taxes typically aim to concentrate their tax hit on higher income workers. However, the question must always be asked as to whether a specific tax increase is larger than is realistic or economically prudent. According to estimates by the Social Security Administration's office, they would ultimately increase Social Security payroll taxes for high-income individuals, those earning $266,000 today, to roughly 2.4 times what they would be under current law. So basically, anyone making more than $266,000 would be taxed 2.4 times higher than what they're getting taxed today. Let me know your thoughts on that. Should high-income workers be taxed 2.4 times higher? Should they pay their fair share to fund Social Security? Let me know your thoughts on that. Number 6, all right, here is that 10% overpayment increase here. So errors under the bill's proposed method for measuring price inflation would cause benefit overpayments of over 10% relative to accurate calculations, mostly benefiting higher income people who live longer. Now, this was one of the biggest selling points of the Social Security 2100 Act, that people on Social Security would get paid a higher COLA, cost of living adjustment. So 10%, that means for every $1,000 you would get an additional $100 more per month under this new COLA calculation. Now, according to the person who wrote this article, this is an error under the bill, and it's an overpayment of 10% to those on Social Security. Now, I guess it's a matter of perspective of how you look at it. Some may say it's an error and it's an overpayment. I look at it as it's one of the big selling points of the bill for people to get higher Social Security payments. And also 10%, it should actually be a little higher than 10% for Social Security recipients. So here, this is a really important one here. So the bill would calculate Social Security cost of living adjustment using an experimental inflation index known as CPIE. There is general consensus among economists that CPIE overstates price inflation relative to CPIW, the measure Social Security currently uses, which in turn overstates inflation relative to the CCPIU, a more accurate measure tracked by the Bureau of Labor Statistics. So I disagree with this part right here. So basically, the language is interesting here. So the CPIE, which is to measure the CPI for the elderly compared to the CPI for the workers are making money, making more money than people, than the elders, than people who are retired or about to retire. So for people on Social Security, which, majority of them are retirees, we have 67 million, 68 million people on Social Security. They would like a higher payment as it is not currently enough. So basically with this CPI calculation, it would give a higher payment. So I'll continue. Relative to accurate inflation indexing, the bill's CPIE would cause COLA overpayments of roughly 0.5 percentage points annually. By the end of the life of a typical person retiring this year, these errors would have accumulated to cause annual benefits to more than 10% higher than they would under accurate current indexing. These overpayments would disproportionately benefit higher income seniors who live longer, pushing costs and worker tax burdens higher. So yeah, I disagree with this part. So basically saying, the language here is really funny. So saying that, under the new COLA the new COLA calculation, the CPIE, overpayments of roughly 0.5 percentage points annually, and then would amount to 10% higher than what they're getting right now. So whatever the COLA is, whatever the increase, it was 8.7% this year, you would get 10% higher normally. So that's actually a big selling point. It would affect people the high income workers as well as low income workers. It's 10% across the board. So I thought that one was really interesting. Let me know your thoughts on that. Number 7, typical beneficiaries in mid-century would spend over 37% of their adult lives collecting Social Security benefits. Basically, this one is talking about the age. So Social Security's inception, individuals could begin collecting retirement benefits at 65, and there were no disability benefits. Today, most common age of retirement benefit claim is 62, while those on disability begin collecting benefits earlier, which means that over half of beneficiaries start collecting benefits by age 62. Spending larger fractions of our lengthening lives in retirement reduces the annual income levels we can enjoy, or increases the funding burdens we face as workers, or both. According to the 2100 Act, it fails to address this growing problem. By 2050, average beneficiaries would spend over 37% of their adult lives collecting Social Security benefits, straining retiree and worker incomes alike. What are your thoughts on that? Over 37% of your adult life collecting Social Security. And then number 8, young workers' lifetime income would be reduced by more than 2% of their career earnings because of Social Security. So yeah, that one's pretty straightforward as well. So yeah, what are your thoughts on these 8 numbers? Different perspective on Social Security. A lot of the other articles that I've shared with you say, hey, the 2100 Act is great because it increases COLA and it changes it. It could get a 10% increase, and this will be better for you because you get a higher payment. This article is saying that it's an overpayment, but I thought it was really interesting. Let me know your thoughts on that down in the comments below, and that is all the news that I have for you today to hopefully cheer you up a bit. Here's my daughter Bella's tip of the day.
Hi guys, it's Bella's tip of the day. I want to tell you the one thing that you should do. Do the things that scare you the most, because after you do that, you become a better person. Bye.
Thank you so much for watching. Appreciate your support. If you want to know the latest bills in Congress right now and the increases that are happening, definitely want to click this video right up here as I'll talk more about that. So click that video right now and I'll see you in that video. Take care, be safe. Thank you for watching.